Welcome back to the ETF Inspector. It's Saturday while I'm recording this, but by the time you're watching it, it will be Sunday, June 15th, so happy Father's Day. This will be the week look ahead video as well as the distribution guesstimate for the fund that is in Group B. This video is covering YieldMax monthly paying funds listed in the title. AMDY, AMZY, APLY, FBY, GOOY, MSFO, and NFLY. Kind of hate running through that list every time, but it sounds weird when I call them FBY and GOOY, so I can't decide how I want to say it. Anyway, these are individual option income funds, so they will only trade one underlying, and I've got this one highlighted FBY because we'll be talking about them for the distribution since they are in Group B. So they trade on Meta. So we'll get back to them in just a minute. I'm on X. I let you know when videos are coming out, and I repost things from YieldMax. So it's ETF_Inspector1. Channel's doing well. We're up to 781 subscribers. So if that's you, thank you. If it's not, think about clicking that button, please. It's free for you and it helps me. You don't actually make any money based on subscribers. It's just the more subscribers you have, the better chance of viewers that you'll have on your videos. I am not at the point where I make any money yet on YouTube. You have to have over 1,000 subscribers and over 4,000 hours of watch time. So I'm not at those limits yet. So I'm still doing this for free, but I enjoy it. So hopefully you do too. Okay, so let's get into the funds. We will start a little more in depth with FBY since they are the only Group B fund we have, and then we'll just get back through the rest of them. But all in all, we'll be looking at what kind of a week we have to look forward to. So FBY covers Meta. Meta closed at 682.87 and FBY at 1654. Just a side note, Meta's next earnings date is July 23rd. So as we get closer to that, once we're selling options from one side of the earnings to the other, we'll collect more premium on those. So that's always a nice plus. So similarly, when we swap out this synthetic and then do the next one beyond the earnings date, there will be extra premium in there for that. So they most recently declared on May 21st, and they paid out 63.69 cents, which I don't know what it was at the time, but this continues to update because it's dividing it by the current price. So that's currently a 50% annual yield. The most recent, as of today actually, 30-day IV of Meta is only 29.3%. Our next declaration date is this coming Wednesday, June 18th. There's $171 million being managed in this fund with a little over 10 million outstanding shares. As of close on Friday, the NAV, or the value of the fund, was $16.52 per share, and it was trading at $16.54 per share. So it was within a couple cents. The synthetic is a July 18th, $660 price. It's currently worth $6.3 million if they were to close it out, which would equate to about 61 cents per share if they were to take the money made from that and to distribute it among all the shares. But keep in mind, they have to open the next synthetic, so they'll need some of that money to use it. This will not play into our current distribution because all trades that are going into this have already been made. So they take the information over the weekend, crunch their numbers, and on Monday they have to turn in to, whoever it is, they have to make those announcements to what they'll be distributed, and then they declare it on Wednesday. All right. As with all these funds, the majority of the money, right, we said 171 million is within the entire fund, and you can see the vast majority of it is sitting safely in treasuries. So 19 million, 36, 15, 29, 16, 34, and 2 is of the 171 is sitting there not really doing anything. You've got your synthetic worth about 6 million, and then your options here roughly, because some are negative, some are positive. As soon as you sell one, you collect money, and then it sits there as an opposite. It's a negative because you got to buy to close it out. So that's what it would cost you currently to close it out. The whole goal with selling these calls is as time decays and as long as the price stays below your strike price, that value will continue to get smaller and smaller. So you sell for a higher price and then you buy back to close at the end for a lower price. That's the goal. So going into this week, we have calls sold at 702.50 and 705. About 3 times as many are at the closer strike price that are 2.87% out of the money. The others are 3.24% out of the money. With all of these, they don't hold any actual shares of the underlying stock. They have a synthetic position by selling a put and buying a call. This will mimic the action from the stock. If Meta goes up or down, this will follow. But this also creates the ability to sell options off of the underlying without actually owning the underlying. They're trading 100% of them, right? Because 2,500 contracts, and then they have 1890 and 610 comes out to 2,500. All right, so we need Meta sitting at 682.87 to stay below 702.50 throughout the week next week to be able to close these out for minimum price and keep the difference. We are going to kind of bounce back and forth between this page. So we now have all the data traded from the last declaration to this one. So as we go through for each day, I don't need to read them all, but you've got a negative, a positive, bunch of nice days, real bad day in there, another one. So what we did, we took all the trades throughout the 4-week cycle, totaled them up, and they lost almost $2.3 million. So when we go back to the first page, there's a couple different ways to come up with a guesstimate. First of all, it's an option income strategy fund. So they're trying to make money and pay it out. Well, there wasn't income, they lost money. So our distribution won't be based on income. The backup plan is they try to pay out an annual yield that matches, we'll say, the 30-day IV. Well, it's just the IV. I'm using the 30-day, so it'd be nice if I could get to ask the fund manager some questions. Are they doing a shorter term IV, a longer term IV? But 30 days kind of like a standard, what people talk about. So the 29.3% 30-day IV. So if we multiply 29.3% by the price of the fund and then divide it by 13, because there are 13 4-week cycles in a month, that would come out to a distribution of 37.28 cents per share. Now looking at the fund and their recent distributions, the last one was pretty nice, 63. We've got some 50s, high 40s, 60s, 40s. So we got to go back all the way till December of last year before we see something around that 37 cents. So I don't think we're going to get, I think they're just going to give us more than that. Just because that's kind of what I've been seeing them do in a lot of these. They kind of, it's like, man, why are they paying so much? So I think they're going to pay us, my guess is 40 cents, and I wouldn't be surprised at all if it's even higher, because on one of the other ones recently, it came out a lot lower. They end up paying a whole lot more, and I was like, oh, that's funny. And then the first, Monday or Tuesday before the declaration, they sold a bunch of, they either sold a bunch of shares over in ALTI or LFGY, or they sold a portion of their synthetic to come up with the money. Not that they have to, because they've got plenty of money sitting here to pay it out. But so I'm going to go 40, and I honestly wouldn't be surprised if it was higher, but don't be surprised if it's 37 because that's what the math comes out to. All right. So that's FBY. Now from here, we'll just go in order, and we won't take as much time on each of these other ones because we don't need to talk about distribution guesses. All right. AMDY covering AMD, Advanced Micro Devices. 116.16 was the closing price on Friday for AMD, 747 for AMDY. There's $144 million managed in the fund with a little over 19 million shares, which makes the value of the fund 747. So it was trading perfectly at the end of the day on Friday. They most recently declared on May 28th because they're part of Group C. They paid out 42 plus cents per share. Their next one is June 25th. So this time next week, we'll be talking about Group C. Their synthetic is a 110 for July 18th with the price of the stock at 116. Those are doing well. They're worth $8.3 million. If they were to close that out and distribute it, it'd be 43 cents per share. As always, most of the money within the fund is in treasuries. They've got two sets of calls, and then so they sell. These are sold calls, and then matching with purchased calls a little further out to limit the potential loss. But the goal is that the stock never makes it to the strike of the sold calls, and then you get to keep all the money or the majority of it. So 119 and 120 are the strike prices. Pretty close, a little bit more at the 120, but not too much. 5,500 and 6,900 contracts. They are 2.4 and 3.3% out of the money. So best case scenario for us would be for AMD to go up to but not past 119 this week. That would increase the value of the fund with the increase in price, and it would increase the profit made and distributions moving forward with not crossing over these and getting to close these out cheap and keep the profit. Okay, next is AMZY for Amazon. They are Group D. Most recently declared on June 4th. It was a 59.5-cent distribution. Next one will be July 2nd. That's 18 days away. 30-day IV is 28.7. I think I forgot to mention that on AMDY. That's a 40.5, so much higher IV, obviously, on AMD than there is on Amazon. Amazon is a lot safer of a stock. They have a synthetic for July 18th at 185. The stock is at 212, so it's doing very well, worth $36 million or $2.11 if distributed out to the shares. $273 million managed in the fund with 17 million outstanding shares. Brings the value of the fund at $15.86 per share. So if you purchase them at the end of the day on Friday, you were getting them at a 2-cent discount. They have just a single price, so $217.50 is their call strike price. They split up their call insurance policies. They bought calls at $222.50 and $225, trying to limit the loss. But so they're trying to keep a little bit more of the difference. So as you can see, these are nearly half the price of those. So paying out a little bit less for the insurance, but at the same time, you're less protected. So half of these shares are capped at a potential loss of $5, where the other half are capped at a potential loss of $7.50 per share. So the 217.50s are 2.55% out of the money. So that's really all we need to pay attention to. Amazon needs to go up about $5 or less for us to have the maximum increase in value and maximum combined with the keeping the maximum amount of money collected from premiums on selling those calls. Next up is APLY covering Apple. Apple closed at 196.45, APLY at 12.45. They're part of Group D. They declared on June 4th for 31 plus cents. Next one is 7/2, July 2nd, 18 days away. 30-day IV of Apple is 28.8%. There's $128 million managed in the fund with a little over 10 million shares, bringing the value to $12.42 per share. So it's trading within a few cents of that. They've made things interesting lately. They created a second synthetic. So their main synthetic here is a June 20th 210. Apple sitting at 196. That's why they are underwater on that one. This will definitely get closed out this week. It has to, because the trading week ends June 20th. So at some point, we will be changing over this synthetic. The guess is that they will just roll it and make it part of this August 15th $200 synthetic. As you can see, the majority of the shares are sitting at the old one with a small portion at the new. The new is fairly close to break even, right? 180,000 compared to 220,000. This is where the loss is. The negative 8+ million is because you got to buy these to close them, and they're currently costing $13.52 per share, 100 shares per contract, 6,410 contracts. So as you can see, you're going to sell these for 80,000 and buy these for 8.6 million. That's a loss, obviously. 83 cents a share loss. Okay, so these guys have the majority sold for June, everything's June 20th. Majority at 207.50, 5.62% out of the money, but 380 contracts at 205. They're 4.3% out of the money. So maximum potential would be to go up to, but not go beyond. I don't even know if that's true, because you want to go beyond 205. Realistically, you probably even want to go beyond 207.50. A best case scenario for us for this week would be to lose these trades, to be honest with you, because this synthetic's got to close this week, June 20th, and these close this week, June 20th. Right now, you're talking about $130,000 and $14,000 compared to over $8 million. So wiping away this $8 million by bringing the stock up to 210 would do much better for you than staying under 205 or 207.50 to keep $144,000. So we would, the goal this week, believe it or not, is to lose these trades. I'm surprised they set themselves up this way. So realistically, they don't think that this is going to happen. So they are basically accepting the fact that this is a loss, and they're trying to make as much money back down here. But just keep that in mind. Best case scenario would be to lose our trades this week on Apple to win the synthetic. Okay, hope that makes sense. That's not a very common situation. Okay, we already talked about FBY. We'll move on to GOOY, covering Alphabet's Google. Google closed at 174.67, GOOY at 12.12. There's 121, almost 22 million managed in the fund with 10 million outstanding shares, bringing the price to the NAV to 12.11, pretty much matching the current trading price of 12.12. Group A, so they just declared and paid last week, 39.78 cents, or 42% annually. So you've got another 25 days till the next declaration. Google's 30-day IV is 27.7%. The synthetic is at July 18th, 180, slightly underwater. It's missing by about 5.5 cents, or $5.5. So that's currently a negative 3.2 million. Fairly confident Google will get over 180 by July 18th, but what do I know? They've got all their eggs in one basket as far as a sold call, 180 maximum amount, right? 7,215 contracts. They're 3% out of the money. And they actually taken a smaller risk, but they only have insurance against 4,750 of those. So the remaining out of the 7,215 are kind of uncapped, as in they could just keep dollar for dollar. Once it crosses 180, they'll keep losing. So we'll see. Probably a safe bet with these safer stocks. Not something you'd want to do with a high IV. But when you're betting with other people's money, it's not so bad. All right, I think that's everything to talk about for Google. MSFO for Microsoft closed at Microsoft at 474.96, MSFO at 1770, part of Group C. Previous declaration on May 28th of about 55 cents a share. Next one will be 11 days from now, June 25th. Microsoft is a fairly stable stock, so it's only got an 18.4% IV. There's 126, almost 127 million managed in the fund, a little over 7 million shares. Brings the NAV to within 1 cent of the trading price, $17.69. Synthetic is for July 18th, 435, so those are doing very well, worth $11 million when we close them out, or $1.54 per share. They have 3 different strike prices selected for their sold calls. They're 477.50, 480, and 485. 0.5%, 1%, and 2.1% out of the money. So, I mean, it's 18% IV, so it's not a big mover, but 0.5% sure is tight. So we basically need this stock to not move this week. Realistically, as long as it goes up and stays below 477.50, that will be our best case scenario. So we've got about $2.50 worth of breathing room on a almost $500 stock. Okay, and finally, NFLY for Netflix, part of Group C. Again, May 28th declaration, they did 68.32 cents or 48% annually. 11 days till their next declaration. Their current 30-day IV is 30.6%. 12.15 was the closing price for Netflix. 18.40 for NFLY. There's 158, almost 159 million managed in the fund with 8.7 million outstanding shares. That makes the NAV at 18.26. That's probably the biggest spread I've seen. So people were overpaying. I think it was down. I might be thinking of the wrong day, but maybe people just want to buy into it. It's doing well. Synthetic's worth just about $10 million. It's for $1,140 on July 18th. So it's definitely well above that. That would be $1.15 per share if they cashed it out and distributed it. They are fairly evenly split between 3 call strike prices at $12.2250, $12.3250, and $12.55. Those are 0.85, 1.68, and 3.54% out of the money. Definitely don't feel good about that. We could literally see all that get blown through in a day, but hopefully not. So again, this is another one. We need it to basically sit still this week to make the maximum profit. All right, 12.12.15. We need to stay below 12.22.50. So it's got $10 worth of room on an over $1,000 stock. All right, that's everything we've got. That's the week look ahead. So now you know what you want each underlying stock to do, so that if you have the YieldMax fund, you can make the most amount of money. Not a lot of things where you can invest in and literally know dollar for dollar how it's making money whether it's doing well or not. So that's what's pretty neat about these. That's why I make these videos. Whether you own them or whether you're thinking about if you want to own them, this is great information to have. So I got a dad joke of the day before we close it out. Perfect for on a Father's Day. Not that the joke's perfect, just telling dad jokes in general. But before I do, thank you for watching. If you liked it, please click the like button. Please subscribe if you're not already. Leave a comment. Ask a question. I get back to every comment. And otherwise, that's about it. So I wrote down my dad joke. Let me see what I got. Okay. Do you know what the best present is? Broken drums. You can't beat them. All right. I hope you had a great weekend. If you're a father, happy Father's Day again. Like 98, almost 99% of the people that watch my videos are fathers, according to the analytics from YouTube. So, are men. So, most likely talking to a lot of fathers out there. So, enjoy your new tie, your new underwear and socks, and hope you had fun grilling for everybody on your day. That's what I'll be doing. But no, Father's Day is great. Okay. Hope you had a good weekend and good luck trading this coming week. Good night.